What's up, everybody? I know it's a little bit a different format. I just want to try this out. Uh, I want to talk about overvalued, undervalued. People keep talking about this. I'm seeing new investors just losing money hand over fist. A lot of it's mindset, opinion. They just don't know. So I kind of want to just kind of overall go over that. Now, also what I called out last year was a crash coming this year. I said it won't be as worse as it won't be as bad as the 2019. I called out a crash. I said 50%. It's gonna be a reset switch. We'll find an excuse. We'll send it. We'll recover. We did exactly that at like record-breaking time. But then 2021, I said, hey, there's gonna be a crash next year. Kind of the same situation. Won't be as fast or as bad as 2020. I said we'd probably go 30%. Get a little reset switch in there. We got a little bit up there. We got a little bit. I even said we got a little bit away from valuations. Not that I actually, as a trader, care about that. I'm taking advantage of intraday moves and trends and stuff like that. There's just things I don't care about on like the investing spectrum. And there's always some investors like, the forward PE, this or that, and there's excuses for days. Like the forward PE on Amazon, it's like always been high. So if that's your factor, you would have never bought one of like the best stocks. Like, and you think Tesla is overvalued, you would have missed out on one of the craziest runs. Like, I don't even just pretty split. Like, I'm crazy in Tesla. Like $300 goes to 5,000. Split adjusted. Like, imagine thinking that's overvalued and missing out on those kind of runs. Now, as an investor, maybe that volatility is not your cup of tea, and there's a hopes and dreams aspect of that. Like, hey, Tesla did a miraculous job. People got rewarded for it. There's nothing on paper to actually back that. So technically it was overvalued. A lot of people still value it like a car company, and they missed out on a huge run. Now, those that bought and held got to ride that roller coaster all the way up, got to ride it all the way back down. We're kind of in the little spinny stages after the first initial, the most thrilling hill on a roller coaster. But that being said, I'm seeing a lot of new investors. There's been a huge wave of new investors as well. Commissions being free, that's a relatively new thing. Like, there's a lot of things just being piled on that brought in a lot of new money. We saw just crazy speculative stuff like pot stocks, SPACs, EVs. Each year had its own theme. Like, this is a SPAC, it's going to be awesome, it's going to join with someone cool. He's got a cool name. EVs, this is the next Tesla. I heard this is the next Tesla for 1 million tickers. I'm like, oh, are you guys all just what are we doing here? Not everything can be the next Tesla. And Tesla was so amazing. I use this reference a lot because, as far as the company goes, why I like Tesla so much is like, imagine walking on a mountain, fresh snow, all white powder. There's no tracks. Tesla had to go and make those tracks. Now everyone else is like, I'll just follow in their little snow tracks and we're good to go. So everyone's excuse was, man, they are just doing things way faster than Tesla. It took Tesla 2 years to do this. I'm like, yeah, cool. You couldn't look past the surface level, so I can see why you're making a mistake. Anyway, neither here nor there. We're talking about overvalued, undervalued, because right now a lot of things, I would agree, seem cheap. Fundamentally speaking, Google's cheap, Facebook's cheap. I'm one of the weird ones that thinks Tesla's cheap. Primarily Facebook and Google, like Amazon. If you look at these PEs, like ratios, they are, I don't know if anybody professionally actually looks at those. There's always like a debate on that. But they're at some serious lows. And so people are buying. I'm seeing like on Facebook, Discord chats, thankfully not my own. Just kind of seeing it across the board. Like a reoccurring thing, like these new investors are just losing money. Now they're buying because somebody said that thing's undervalued. So like what actually brought this video on is Brad from OwnTheChaos. Let me pull his channel up real quick. He does this thing called overvalued, undervalued, and we gotta I've been on there a couple of times. It's always like awkward for me because I have to like disclaimer everything. But a lot of things he says. Let me just get his channel up here. Here we go. Give him a little shout out because he's got a way bigger channel than I do. You have to see me on his channel quite a bit. But he does this thing called overvalued, undervalued. Like, you just give him the ticker and he'll tell you what he thinks of it. A lot of things have been like undervalued, still selling off. All right, and undervalued, overvalued, That's opinion-based kind of things. Like there's really good analysts. Like you would probably want to take their opinion seriously. Still there's no rule out there. If there was any rules to this market, I'd have one video. It'd be teaching you that, and then I'd just have a live chat. We're just hanging out talking all day, just like, oh, undervalued. We're gonna go ahead and buy that. Swipe up. We'd all be rich. But it's not. There's not a rule-based strategy for this. Despite what any scammer or anyone will tell you, there's just not 3 simple steps. There's ways to poke numbers in an Excel sheet and fudge those, whatever makes you feel better, whatever gets you to sleep at night, make you think you found the best deal. But so still opinion-based. I think even in my opinion, it's still there. But the one thing everyone keeps missing out, no one's hitting on, is the market sentiment. Like, no one cares. Like, oh, it's undervalued. Cool. Like, most of you guys probably can't afford a supercar. So when a supercar is on sale because the used car market's just crashing, cool story, bro. You still can't afford the Ferrari F8, right? Yeah, it's 60 grand off. Can you buy one? Most of the people in my comments can say no. Now, what I will say is everyone's got a price. There is what I call, like on my other channel, Don Francho, a Corvette in the wintertime. In the wintertime in Missouri, like there's just snow, like a Corvette's just not practical. Okay, like all the power's on the back wheel. The thing weighs like a pound. You know, just a bunch of power, no weight. Mix that with some racing tires and snow, just doesn't make sense. They can sit on the showroom floor. Make it cheap enough, and someone's going to say, I actually don't care. I'm going to hold on to that. I'm going to buy that because everyone's got their price. Right now, the whole sentiment in the market is they don't care. Still selling off. You know what everyone's opinion is? I'll show you right here. Here's everyone's opinion. Sell it. If there was any other opinion, there would be a green candle. All this is more buyers it goes up, more sellers it goes down. You can never evade the supply and demand aspect of this. So, cool, you thought everything in the S&P was undervalued, and look at your money go down. Good job. You know, hinting back to what I said about mindset, we're in some crap right now. We're in the trenches. Like, things aren't looking good. Again, I called out a 30% crash. I even said, I skipped right over that. 30% crash, come July, we'll turn this ship around. And I gotta say, I'm revising that because I think we're due for another minimum 10% down. Even looking at the chart, 10% just does not look like that much. This blue line was actually my call out. The 10%, the further 10% we have actually lines up with that. I'm thinking probably more like 20%. And the weird part now is going to be, when do we buy? So getting back to everything, mindset, the sentiment's just not there. When the sentiment is there, it's time to buy. We've hit the bottom. There's been a recession. And actually, someone gave me the definition of recession. There's no announcement. You know, it's 2 GDP quarters. The worst case scenario is we got one bad quarter, one good. We already had the bad one. Then one good one. Then one bad. We played this back and forth game. That's going to suck. That's going to be a cluster. That's going to be a hard market to trade. Mindset, though. Are you an investor? If you're calling yourself an investor, these are the times arguably to be buying. Like, hey, I'm an investor. Like, if the one thing history has shown anybody, it's that buying in a recession has been very profitable. You remember that old saying, buy low, sell high? I can tell you right now, you had no problem buying the green candle, and you're freaking out when the red one shows up. You just gotta tweak things. You're just not on the right panel. Like, this was super easy. Yeah, you were watching money grow up. You've seen the potential. Now you're seeing the potential downside, and you're watching emotions, low volume. There's a lot of things that play into why these red candles get so much bigger, so much faster than the green grind up. This was like a super grind up, by the way. That's full thrusters blaring. We are going to the moon, like a different moon, not the one we see at night. So that being said, when the buyers do come back in, when we do get that bottom, I want to say hopefully we go into recession, because that'll be cool. That's where I'll be finding the bottom. That'll be time to buy. But if you're calling yourself an investor, you shouldn't be looking at this. The next 5 days shouldn't be relevant. The next 5 months still should not be relevant. I'd argue if you're holding that thing less than a year, you're not an investor. That's just a longer term swing trade, right? So nothing. I mean, I do it all the time. I swing trade like a day trade, a swing trade, a scalp. I do invest. I think it's important everyone does invest, but I don't kid myself when I'm buying things. I have an investment account. Tesla's down. I've been buying a lot more Tesla. Tesla wasn't my biggest position up until recently. But as it goes down, I'm not worried. There's no post on Facebook saying, what should I do? I put all my money in here. That's my investment account. I'm going to buy now. I'll check it in 5 years. I keep keep an ear to the ground. Make sure nothing fundamentally changes. I want to make sure Tesla didn't just close up shop. Elon quit. The other founder said, you know what? He's right. Let's cash out and roll out. At that point, something fundamentally changed. I need to make my decision and manage that position right then and there. Unless something like that pops up, you're still in it. Day to day, some of you guys are getting lost in the day to day, and you keep throwing this word around. It's undervalued. I'll leave you with this tip, or how I buy things in a dip like this. You guys know how I buy like crypto. Every week money goes into Bitcoin, Ethereum, savings account, and then I dump the savings account when we get into certain levels. It's still that same way with stocks, but things that are cheap, because I think when the money does come back, when the sentiment does turn around that the bottom is there, they're going to go for those undervalued cheap tickers. You're going to watch the money jump into the cream of the crop first. I personally I like tech. I think tech is where it's at. I think the money goes into Google and Facebook first, Tesla. These are all my biggest positions. Amazon. There's things that are fundamentally cheap that will be bought up first. But if you're playing the trading game, calling yourself an investor, you're just going to take unnecessary losses. You're going to just call the stock market rigged. You didn't have a full grasp of what you're doing. If you're throwing these terms around, you have to have the mindset behind it, not just, it's undervalued, I bought it. You still have to have that plan with it. Because arguably right now, I would say, I think things are going down even further. I do think things are getting cheap. I'm curious how much cheaper can they get once I reach that thought process. Like, I've been buying Google. I bought some Amazon. I haven't added to it in a while. I've definitely bought more Facebook, Ford, Tesla. I've added on quite a bit. I've also added on a lot of just cash from profits from trading that I haven't dumped in. As we trickle down, my profits trickle into the investments, heavier on the cash side. Once we get that bottom, what I call a bottom, like it'll look like we're on the weekly time frame, so you'll see something like here's the sell-off, we're going to push, your favorite YouTuber is going to call the bottom, he's going to be wrong the following week, it's going to be down. You're going to look for that higher low, and then we're going to continue. We almost got it on a smaller time frame. Make sure it's on a bigger time frame. You're going to see something like this, that higher low. You're going to see all the bearish news right before, all the headlines make you just want to sell, completely capitulate, everyone get out. That's probably where you'll see a bottom. You'll see a push up, you'll see a pullback, you'll see a higher low. Once we get in there and we start to push up, make that higher high, that's when I go heavy. So my averages stay consistently lower than the price, because I did trickle down, which brings my average down. But also when we turn around, I'm going in, just going hard in the paint while it is still down. So if I'm right, I pick the right ones and they do recover, my averages are down, my investments are way up. I'm not just buying up here saying, I bought the dip, this is an investment account, I bought the other dip, my new paycheck came in, I bought the next dip, I had to sell. Or like you bought so much that over here that it took forever just to get back to break even. So trickle in, little buys, little buys, little buys. Time to go hard. And then you're just green, getting more green, buying more green. Your investments just from that alone will be a huge difference. Kind of like dollar cost averaging, just weighting it a little bit more to the downside. Anyway, I'm going to wrap it up here. I just realized I'm way off screen with this new setup. If you keep seeing undervalued, it might be. Those are investment terms. I agree a lot of things are, but don't confuse yourself. Are you a trader or are you an investor? Because you're not going to get those instant gains. It's not 2020 or 2021 where you just bought something next week. You bought something as an investor because you looked up all the fundamental analysis, you did your DD, all that. Next week you're up 30%. That was the fantasy land. We're getting back to reality now. Anyway, careful with the investing terms unless you are an investor. And just have that plan. Am I going to buy more when this thing keeps going? Or let's say we get a smooth haircut, 50%, nothing's fundamentally changed, we just capitulate. Am I still in this? Have all those answered before you ever click the buy button. It'll help you out with, you won't stress over your positions, no anxiety. You'll just be a much better, well-rounded investor in general, provided your stock picks were at least halfway decent. So careful on the crazy ones. As much as I hate to say this, people hate to hear it, stocks still have a little bit of a popularity contest. And I'm sure there's awesome companies out there that we've never heard of, but we all know about Tesla from Elon. So if no one's talking about it, if you have to sell me on that position, then why is it such a good deal? No one else is buying it. Well, no one, everyone else is buying it because these candles won't be red anymore. Anyway, I'll really wrap it up here. Let me know how you doing. You guys buying this dip? Where do you guys think we actually are? I got to change it to another 10 to 20% down. My original call out was 30%, so 10% more puts us there. I just don't know if that's enough. I think we might scoot that thing right on down another 20% from where we're at now. Anyway, I'll wrap it up here. I'll see you guys in the next video.